As AI infrastructure grows, some of the biggest questions around the trade are only getting harder. How much AI will companies consume? Do cheaper open models change the economics? And even with high demand, is there enough labor and power to even run data centers? Michelle Weaver, Morgan Stanley US thematic research strategist and executive director, has the job of passing these questions on a daily basis. We're going to talk about the AI economy. And for me, at the end of the day, it is just simply trying to measure demand as it is now against supply in the future states of both. Where are you netting out at the moment?
Currently, we are still very much undersupplied. We are still seeing compute be a very constrained resource. And I think what you really have to look to is the AI adopters. What is the everyday business consuming AI seeing? Are they starting to see ROI? Are they starting to see benefits from AI adoption? And the answer there is yes. We're still very early on the S-curve for AI adoption, but our tech team CIO survey shows that by the end of this year, the majority of companies will have at least one AI project live and in the field. And we've seen that when we look at S&P 500 companies, 25% of those companies are now able to quantify the benefits that they're getting from AI adoption. That's up from 14% a year ago. So companies are incrementally seeing positive signs around what they're getting out of AI adoption and voicing that to investors.
So you've gone straight to this through the lens of basically corporate America, its attitude towards AI and the action it is or isn't taken. And that's measured on token spend, the debate around token maxing.
Yes.
What is the current, in aggregate, attitude towards token spend?
So we're certainly seeing a decline in the culture of token maxing or trying to consume as much compute as possible. So I think you have to separate what's going on with the engineer and with the power users versus the more typical user. So power users, yes, had been consuming a ton of tokens. And enterprises are now thinking about how can we rationalize that? How can we make sure our employees are using an appropriate budget of tokens? But the typical user, the median user, spends less than $11 per month on tokens. So for the vast majority of people, token spend is still very much under control.
The big story this week has been NVIDIA and the $500 billion it is channeling through those 6 Wall Street firms, right? The idea is it greases the wheels. It takes away the excuse of not being able to finance data center. But it seems like capital just isn't enough, right? There are labor bottlenecks. There are other supply chain bottlenecks. How severe are they?
Yeah, still significant bottlenecks to getting data centers built, and that does make the value of compute even more strong. But I would say the number one bottleneck is labor. There is a huge shortage of electricians and specialized labor to actually put up these data centers. And then the second biggest bottleneck is power. We estimate around a 40 gigawatt shortfall in power needed through 2028. When we start thinking of some of these innovative time to power solutions like Bitcoin site conversion, innovative fuel cells and turbine projects, you still have around a 10 to 20% shortfall in that power needed. So still a huge bottleneck there as well.
We have the midterms fast approaching, and the NIMBY movement, anti-data center movement, seems very real. Have you modeled for that in your forecast for the market and growth in industry?
Yeah, so I would say they fall roughly into 3 different buckets of concerns, and there are ways for these concerns to be addressed. There's just a lot of nuance here. So first concern, power bills. Communities are very concerned that if a big data center comes to town, starts consuming a bunch of power, ultimately that could end up on consumer power bills, and that really speaks to how worried consumers are about affordability. But being off the grid helps to solve for this. You're not touching the grid. You can't possibly impact power bills there. Second bucket, environmental concerns, water and air. This really depends on the type of cooling you're used. Closed loop cooling, much less water intensive than evaporative cooling. And then the last bucket is local quality of life concerns, a lot of concern around land use, traffic, noise, dust. Here, I think you'll start to see more brownfield sites where you're saying, okay, we're coming in, we're cleaning up this site, we're able to provide jobs to the community and provide a productive use to this piece of land. So a lot of nuance here, but I think this is going to be a very big topic as we head into midterms.
Michelle, we started this conversation with you saying we're still supply constrained, demand vastly outpacing supply.
Yes.
So this is strange to ask, but how real is the risk that we get to a place of oversupply? Too much capacity gets built?
I think we're still very far off of that. I don't see any signs that we're seeing supply overbuilt. I think those bottlenecks we were just talking about, the power bottlenecks, the political bottlenecks, the labor bottlenecks, that's really going to keep a check on supply for the next few years. Supply, I wouldn't start to worry about that within the next few years, just given how short we are on power through the next few years.
So this is interesting. Later in the program, we're going to talk to Silicon Data, the benchmarking for compute. Everything I'm hearing from you is that all the factors are in place to keep compute prices high.
Yes.
We talked about token maxing or token spend. There's a difference between quality of token and bringing the cost of tokens down. None of that seems to be the direction of travel.
Mm-hmm. Correct. I think the big debate right now is the open model versus closed model. Who is ultimately going to process those tokens? And I think there's a different picture for when we look at the U.S. versus global. Globally, for the majority of firms, I think they're just looking for something that is good enough. They just want to be able to process the requests that they need. In the U.S., there is still a lot of concern around security with using non-U.S. models. There is a lot of concern around just business continuity risk if the government comes in and regulates and you spent all this money fine-tuning an open weights model. How do you deal with that? So I think in the US, you likely end up in a hybrid state of the world where you have both closed and open models being used in parallel. Currently, around 63% of companies use both, so I'd expect that to continue.
Michelle, it's your job at Morgan Stanley, as much as is possible, to have a crystal ball to tell us what happens next. What are the outcomes you're expecting here, particularly sort of on the open-closed debate that we are having?
That hybrid end state of the world, I think, is most likely. I think when we think about companies are already adopting AI. Yes, they're early on in that adoption curve, but adoption is sticky. A lot of this is changing employee behavior. This is changing human behavior. And so given that a lot of companies are already using closed models, employees are already building skills on these models, they're already changing their workflows, I do think there will be a pretty strong degree of stickiness there. But maybe you have smaller use cases where you really want to fine-tune a model. You want something really specialized. That would argue for an open weights model. If you have new use cases that you just want to serve it as cheaply as possible, that would argue for an open weights model. But there's a lot that's already been built on top of those closed models, and I think it will be very challenging to come and rip that out.
Michelle, real quick, regulation a wild card here in the US?
Mm-hmm. Yes, very much a wild card in that open versus closed debate. I think that is something companies are thinking about if they were considering implementing a open weights model from overseas. What if those companies are no longer allowed to operate in the U.S.? And so I think there's a lot of hesitation to go fully into some of those open weights models, given that geopolitical concern. The other big issue too is, like we're talking about, the community pushback, the state level moratorium. New York State was the first to introduce a state-level moratorium that could be spreading to other states. So that's the other political wild card to watch here.